Two of Russia's largest oil giants, Rosneft and Lukoil, are now facing tough U.S. sanctions, and the impact could hit India's energy sector hard. Because of these new restrictions, India is expected to significantly cut down its imports of Russian crude oil starting late November 2025. The sanctions don't just target Russian firms, they also penalize any major global trader doing business with them. That means assets could be frozen and financial transactions suspended, creating serious risks for buyers. Indian refineries, under pressure. India's major refiners, Reliance Industries, HPCL, Mittal Energy, and others, are being forced to look for alternative oil sources. Reliance, which has had a long-term supply deal with Rosneft, is expected to pause direct purchases and explore new trade routes. HPCL, Mittal Energy, and MRPL have already cancelled upcoming Russian shipments. However, Nayara Energy's Vadinar refinery, in which Rosneft still holds a stake, will continue limited purchases under existing contracts. But as these sanctions take effect, India may lose access to around 1 million barrels per day of Russian crude, a gap that needs to be filled fast. Who steps in to fill the gap? To cover the shortfall, India is turning to a mix of suppliers: West Asia, the Middle East, Latin America, West Africa, Canada, and even the United States. In fact, in October 2025, India's U.S. oil imports surged to 568,000 barrels per day, the highest since March 2021. This diversification helps India maintain its energy needs, but the cost factor remains critical. Global price volatility is expected to rise. Saudi Arabia adjusts prices. Sensing market shifts, Saudi Aramco, Asia's largest oil supplier, has cut its December crude prices for Asian buyers by $1.20 to $1.40 per barrel, making its Arab Light crude cheaper relative to the Oman-Dubai benchmark. For North America, the cut is 50 cents per barrel, while European prices remain unchanged. Why the price cuts? Analysts say Saudi Arabia is protecting its market share as Indian refiners pivot from discounted Russian barrels to cheaper Middle Eastern oil. Reliance, for example, boosted its Saudi imports by 87% in October, signaling this major shift. A challenge and an opportunity. Yes, this is a challenge for India's energy security, but it's also an opportunity. With new suppliers entering the mix, India's import diversity and flexibility are growing fast. By early 2026, India could build new commercial pathways that reduce dependence on any single source. However, global oil markets are likely to stay volatile as geopolitical tensions continue. For now, India's government and energy companies are working carefully to avoid price shocks in domestic petrol and diesel markets. The bigger picture. This situation shows how geopolitics directly shapes the global energy trade and why countries like India must craft long-term, resilient energy strategies. Because as the world is learning again, when oil becomes a weapon, even distant sanctions can shake entire economies.